All righty. Welcome to the first one for 2026, which is the high level investor market update for BDMs and property managers and all those responsible for growth in their business. In my marketing, I've constantly sort of said that if you were getting asked by your investors, should I sell? Should I hold on? It's really great just to have that back end idea of what is happening so that you can answer those questions a bit more confidently. So hosting these with me for the first half of the year is Reese. Reese, can you just do a quick intro for me as well so people know who you are?
Yep, absolutely. So I'm Reece Bettle. I'm the managing director of Folio and PropStack, which is a property investment firm and also market research house as well with PropStack.
Amazing. Now, I am a little bit out of touch of the Perth market because I've been away for a month, so I'm very excited to see what is happening on your end. So I'll get you to share your screen if you are able to. Okay, and we'll just get stuck
Mhm.
straight into it.
Absolutely. And
Just having a quick look. I've got mainly Perth people here today, which is great. So sometimes there might be people from other locations, but a good team of Perth BDMs that I can see, which is wonderful.
okay, now am I sharing anything? I think I had the same issue last time I did this.
You're sharing. It looks a bit smaller. Like I can see your whole screen, if that makes sense.
Okay. Um,
And oh, that's getting better. Yep,
you can see something now?
yep, that's fine.
You
I
see the
see.
right thing. You can't. Does it look like a graph? A graph?
I can see your graph, but I can also see all your tabs and stuff. But there's nothing offensive
Okay.
on there, so you're safe.
I removed all
Lucky.
that. Don't worry. Don't worry. Cool. Okay. Look, I'll just
Yeah,
kickstart.
that's perfect. Go for it now. Yeah.
That's cool. I'll just kickstart. So, yeah, usually I would have had some other slides here, but I only came back yesterday, so it probably was a little bit set to probably similar to yourself, Ash. Switched off over the last couple of weeks, but I was based in Perth, so was keeping my eye sort of in terms of the ground. It is very quiet over the last couple of weeks, generally in every market in the property industry. So, you might see, and I'm a person who does it myself, but you might see a lot of agents out there talking about these historic low listings in Perth at the moment, which is really driving the prices because there's no stock there, and that's absolutely true. Over the last couple of weeks, we saw some ridiculous numbers like below 2,000, which has never been seen. I think when we last did this catch up, it was heading towards below 3,000, which would have been a historic low. We did hit below 2,000 over the last couple of weeks, but I would take that with a pinch of salt, just because no one's going to be putting their house on the market over that last couple of week period. And there were still some transactions getting done. So from our folio business, there were sort of transactions getting done over some of that break as well. So not to say we're not at historic lows. So we are definitely at historic lows. I just say I was seeing a bit of activity over the last couple of days from agents on my social media feeds, and talking about the low 2000s, which is really concerning. But I would take it with a pinch of salt. We'll start to see more stock come on the market in the next couple of weeks. For me, it was a tale of two halves for Perth in terms of property prices or property growth last year. I was actually looking at the stats, and nearly, I think it's 50% of the growth happened in the last quarter in Perth, and there's two things why that happened. One, we had a couple of cash rate announced decreases over the year, so in terms of affordability standpoint, that was improving. But the big one was the government pushing forward their first homeowner scheme, where there's no LMI, and then increasing the cap up to 850. And that's where we saw a lot of activity. So, especially first-time buyers, and you've almost seen the base level now of a property price, and I'm talking probably more units in some of these blue chip owner-occupied areas. Base price now going to that 850. So, not much stock, less than 3,000. Like I mentioned, it's less than 2,000 at the moment, but it's probably sitting around that 3,000 throughout the last quarter of the year. No stock available. You've got this scheme coming in. You've got a lot of buyers who have missed out on a lot of opportunities over the last 12 months, and they just want to get in the door. So what was happening is it was really driving. If you had a unit that you bought for 650, 700 within the last 12 months, that has shot up to 850 by the end of the year. So that's where we saw a lot of the demand. You can kind of see with this graph I've got here, this is like the median house price and the median unit price. This looks at over a 20-year period. So it's really important to always go back, not just look at bias or recent, the last couple of years when Perth's been on this cycle, but to look over a bit of period of time. I might have mentioned this in the last catch up, but you can clearly see, if you're looking at the last 20 years here, house and units have performed a relatively the same pace. And there's a same gap. So I'm not sure if you can see my cursor over here, but you're looking around sort of from March 2011, you can clearly see the gap between the median house price and unit has always kind of been at that similar level throughout. Now, what we saw at the start of the Perth cycle, so post-COVID, around here, around the 2022, houses, because a lot of East Coast investors were coming in. I'm sure a lot of people on this call would have dealt with a lot of East Coast investors that were really started the cycle and saw the opportunity here in Perth. If you're an investor, you obviously want to get the best appreciating asset. A best appreciating asset is going to have the best land components. So that's obviously going to be a house. So at the start of the cycle, the houses go on that run. And what you can clearly see, the shoots from the houses, and then you can, around this time here where the house has gone up, you've never really seen a big of a gap between the two over the course of the last 20 years. And we sort of predicted over the last 12 months that units would be the best performer in Perth, which, as you can see from the sharp shoots here around some of the back end of 2023, 2024 and 2025, we really saw it start to go on a run. But the reason it does that is as we're heading towards probably the topper end of the cycle, units will always trail a little bit behind. So houses, I think, have had this little kicker, which is around here when this is where the cash rates and first homeowner scheme. So we've seen a bit of an uplift there from a house perspective. But now we're probably looking moving into 2026. We're now pushing from a housing perspective, starting to get an affordability cap. I'll talk on some affordability stuff on the next couple of slides. But we're really starting to see, entry level for a decent investment grade stock level now, sort of at that 800, 850. There are still some value add sort of unit plays around the sort of 7 to 750 mark, but we've really seen over the last 12 months a huge increase. So 2025 was definitely, in terms of Perth, we outperformed every capital city. Looking at some of the core logic data that came out last week, Perth was besides Darwin, but I'd almost count Darwin as a regional rather than a capital city. Perth outperformed the country, and it wasn't tracking that way. So Brisbane, Adelaide were tracking well ahead of Perth until we entered that last quarter. But in terms of that sort of first homeowner, no LMI cap coming out, it really sort of boosted the back end of the market. And off the back of the no listings as well. So I mentioned there we had under 3,000. The other key stat to look at over that period was actually the sales to listings conversion. So what that means is, okay, if we've got 3,000 properties on for sale, how many are selling in that period as well? And what we were noticing when we're tracking our data was if we're doing between 30 and 35% conversion on the sales in terms of the Perth as a whole, at least 0.3 to 0.35% growth per week. So that's where you started to see the last couple of months of the year, we were doing 2.5% growth per month. That was purely down to the lack of stock. Absolutely. That's the main driver of the supply, but demand as well. So sales to listings, so the amount of sales that were going through was over 35%. So in terms of kind of forecasting for this year or especially Q1, it doesn't feel like there's no indicators there that can possibly see the market slowing down. It's generally going to be down to a supply and demand. Some of the supply metrics that we track at the moment, we're about 10,000 homes behind where our population is at the moment. So unless there's some sort of catastrophic event that can kind of slow it down, we don't see it slowing down from a supply standpoint. The other things you need to look at as well, so supply and demand are going to be the major economic factors in determining sort of the price growth. Sentiment is a big one. And what I mean by sentiment is this first homeowners cap was coming out in October. We actually started to see the market rise in September because people wanted to get into the market before the cap came in. So sentiment can drive. So there could be something that comes out in the media over the next, couple of months, and that could change the market. So to give you an example, when Trump came out with the tariffs sort of 9 months ago, that completely, stock market took a hit. Property market softened everywhere across the country for the first month until everyone understood where that sort of sat. And that was a lot of sentiment. Nothing was actually said how it would affect Australia at that point. There's a big announcement, can change the sentiment. So the only thing that I can see it kind of slowing or doing a bit of a deviation in terms of where this is going in 2026 is something big to happen from a sentiment change. However, the other thing that will likely happen will be an affordability cap out. So I'll show some slides where you can see where we sit from an affordability standpoint, but eventually you're going to get to a point where, the median house price for both units and houses for the demographic that they're trying to get in, it's going to become unaffordable. And what it'll do is start to slow the market down. So in terms of kind of growth perspective, we did 16 to 17%, depending on which sort of data warehouse you look at in Perth. And previous year we did over 20. We're predicting to probably do around 10 to 12% this year. So a bit of a slowdown, but still, you'd be pretty, if you're an investor, you'd be pretty happy with the 10 to 12% growth for the year.
Can we just stop on that slide for a bit longer, Reece? Because when I have clients that are unsure whether to buy a house or a unit, for example, generally,
Yep.
I would have said to them that the house is where you're going to get the capital growth, and the unit is generally where you'll get the cash flow growth, because units are leasing out for really, very easily, great prices. But then when I look at this chart and I think to myself, well, in fact, the graph is showing that the units and the houses are sort of being consistent. Therefore, I'm being incorrect in saying that.
Not at all. So, you're looking at it. I'm assuming you're saying is unit. Getting it is units a value play, I guess, in terms of a capital growth perspective. Absolutely, I think that's where we saw a lot of the growth, and generally, and when we're talking units as well, I think a lot of people, when you start talking units, they probably think of apartments or the high-rise apartments, high density. When we're looking at units from an investment standpoint, we're looking at low density. So, ideally at the start of the cycle when it's affordable, we're looking at townhouses and villas, we bought, just to give you an example for everyone on the call, they're obviously Perth based, we're buying a lot around the Yokine, Chewett Hill area, Judama. You get a lot of those units on 300 to 320 square meters worth of land as well that you'd have attached to it. So those are ideally where you'd kind of start. And then when the affordability starts to get pushed out, then maybe you look to, maybe some of those low density. So generally as an investment, we don't recommend our clients buy anything over 10, over a complex of 10.
Yeah.
But I think where units become really a valuable play is when, and that's why you see it in every cycle. So Brisbane's a very similar market to Perth, just ran 2-3 years before Perth. And if you looked at Brisbane over the last 12 months, I think they did 10 or 12% growth for houses, but they did 20% growth for units. And what that's showing is when you start to get towards the back end of a cycle, because the houses got so unaffordable, people need to get into the market, whether that's first-time buyers or even home movers, to an example, or people that are coming into the state or the city, they need a place to stay. So that's why units are really an affordability play as well. And as you mentioned there, Ashley, the vacancy rates are still very attractive. The vacancy rates are still very attractive, and the yields, although aren't as profitable as what they were sort of 2-3 years ago, they're better. I guess a better value play than what a house would be for investment.
So as we're approaching that potentially a bit of a cap in the actual houses, there might be, I don't know, 3 or 6 month opportunity for clients if they were going to buy something else. And when we say units, the villas or townhouses might not be a bad idea, because if it runs on the back of what Brisbane's done, we could see that go up. So that's sort of what I'm taking from that.
Correct. Okay, yeah, and I think I'll tell you what we've noticed is most of our first time investor clients, that's the type of asset they'll buy, because they're probably a little bit younger in their journey. They've maybe just done well in the Perth market over the last couple of years and want to maximize some of their equity. But in terms of like capacity, they're not at the peak of their professional career or peak of their professional career. So from an income perspective, capacity perspective, they have a lower budget, or maybe they're a bit more risk adverse because of their first investment. So units are a really great play because look, I was mentioning there's good high quality units are now pushing to that 850, but you can still get some decent stock between that sort of 650 and 750 mark as well. So definitely from a first time investor, it's a good play.
Yeah, great.
Okay, cool. I won't spend too much time on this, but just kind of cover the similar story that I mentioned there. This is what I was mentioning earlier. Stock on market. Hasn't been updated from the last quarter because it's a 2 month delay. But as I was mentioning, this yellow line is actually going to be below the axis there. So what you can clearly see is we've got the stocks significantly decreasing, and the property prices are significantly increasing. So back to that whole side of supply and demand, property prices are going to keep going up while there's a lack of stock and a lack of availability there for clients to choose. This one is the other metric I mentioned. So you're obviously going to look at supply and demand. It's going to be the core factors to understand where the property prices are going to go. But I mentioned there was two other things that could affect property prices. One was the sentiment, which is something that's out of your control to a certain extent, unless there's some government policies coming up, there's an election, or there's something, I don't know, there's a war about to start. You can maybe predict there's going to be some sentiment changes, but a lot of that's going to be unpredictable and could happen at a whim. The other metric, though, was affordability, like I mentioned here, and we'll show this on probably this is a key index that we look at, and what this is the median household income, which is consumed by the median household mortgage repayment. So what that's saying is essentially, if you look back here in 2007, so the blue line is for houses and the yellow line is for units. Back in Perth's peak, so the last boom, we peaked at about 49% on the affordability index. What that means is 49% of a household was spending their income on their mortgage repayment. So what this shows us is history says people in Perth historically have paid as much as 49% of their household income on their mortgage.
This is what makes me so angry, because they're only complaining about it now, and I didn't hear them complaining about it in 2007.
That's it. I think that's the challenge, is just seeing where. And this is what's important, to not look at the recency data, right? Like if you look at the last 3 or 4 years where Perth's gone on in the start of its cycle, you can just clearly see a sharp incline. So if you're just doing recency and you're looking at that, then absolutely, that's what people are saying. This is the most unaffordable it's ever been. But if you actually go back, we're nowhere near where the peak is, and you can actually see, because we had some of the rate decreases at the back end of last year, we've actually had a little bit of a dip. Now, when this data gets updated, because this data is a 2.5 month delay, so I'd imagine once we get the updated data in January, you'll probably see this one tick back up, just because we had a really strong end to the year in terms of price growth. But still, we'll be nowhere near that 49% that we were back at its peak. And this graph kind of paints a similar story to what I was mentioning with the houses and units. If you look at the history from an affordability standpoint, it's been kind of neck and neck, really. Where there's been a similar gap, meaning people that are buying houses, that they're spending a certain percentage of their income on their mortgage, versus people that are buying units spending a certain percentage. Similar story to what the growth was showing you. Houses went on a run, units were a bit delayed behind, and now you can see, obviously, houses are starting to go down a little bit and units starting to go up, because people are starting to now see that as a value play. So for me, that just paints another picture why there's still a good value from an investment play for units, where the gap's never been as big as it is now. You'd likely, if you're looking at the last 20 years worth of data, you'd assume we're going to get back to a similar trajectory that we have over the previous 20 years of the cycle. So this is kind of another graph that kind of indicates where why we see the strength in units at the moment into 2026.
And then if we also have a think about, because that still frustrates me, the people that are complaining about affordability, I guess if we have a little think about their age group, let's hypothetically say they're in their early 20s, when they probably became an adult, they were probably quite low with that affordability. So to them, to see that increase when they
Yep.
came into being an adult at that low point, that's maybe why they're whinging and complaining. But because when it was last that high, they would have been 3 years old.
That's it.
That's
That's it.
probably it, was, isn't it?
I, I think, and this is the other thing as well. I haven't got a slide on this one, but Perth has the highest medium salaries in the country. So if you actually look at, I just showed you the Perth Affordability Index, so houses and units. But even though we're not the cheapest from the medium house price now, and Melbourne's got a cheaper medium house price than Perth, we are still the most affordable capital city. So that's why you're still seeing a lot of interstate migration, which kind of tees me into this slide here, which is your population growth. Now, this isn't a value growth. This is a percentage increase. So, for instance, people in Melbourne's got the highest growth because it's got the bigger population with a high increase. But this is percentage on current population that's coming in. And you can see here the reason, back to that sort of supply and demand, back to the demand factor, where Perth is leading the way for population growth. And the second is actually Melbourne. So Melbourne's a market that we're starting to see out of recovery. It's probably the more medium to long term best play from an investment standpoint. So, and one of the big drivers for Melbourne is more people returning. But as you can see there, from a percentage increase, which is significant, because if you think about it, the government's trying to approve houses for the amount of population, the growth they've got. If we're growing at a higher rate than what they're prepared for, then we're going to have an undersupply of houses. So Perth is leading the way, and actually one of the fundamentals which is driving the population growth is actually interstate migration. So when you look at interstate migration, Perth has the highest percentage increase. And if you look at, I haven't got a graph on this, but if you looked at pre-COVID, Perth was losing, or WA was losing sort of 20, 25,000 people per year. Whereas now it's swung the other way. Post-COVID, lifestyle changes, unaffordability in places like Sydney and Queensland as well. People are now actually seeing Perth as a lifestyle choice, and now we're gaining that sort of 15 to 20,000 people into the city. So I think that's probably been the big driver for the population growth. We are getting overseas migration, yes. Mining does help with that. But I think the big one that kind of doesn't show us that it's the mining industry driving this is we're getting a lot of interstate, and it's definitely from a lifestyle choice as well.
And that's still another factor in why, like for me, I say to clients, if they're thinking of selling, I feel like we've still got a lot more in our, a lot more fuel in the Perth market. So I feel like that's another factor as well. That's good to know for the BDMs that, we are leading the way with population growth, which is going to help with the supply and demand. Interesting. There's this guy on TikTok that I've started posting his videos on my SoCo page for the pure reason that he's been showcasing, he's from Sydney, and he did a TikTok the other day about, oh my gosh, guys, you will not believe that I have just rented this property in Mandurah, or he didn't say Mandurah. I rented this property an hour south of Perth, $550 per week. This is where I'm living. And he was just so excited about the value he was getting in comparison to Sydney. And I shared that because it was showing a really great, a positive side to renting and affordability in Perth instead of everyone whinging about it. And then he also did one on Mandurah the other day. So I posted that on the SoCo page as well. And he was talking about, like, he goes, I don't know why people talk about Mandurah negatively. He goes, this is where I'm living. Like, look at all this beautiful ocean. And I think people from interstate see Perth in a completely different set of eyes than what Perth people do.
100%. And there's no bias there. And I think so. I mean, that's interesting. You talk about Mandurah, and Mandurah and Rockingham. They were some of the best value buys our business did 3-4 years ago. And the fascinating thing was with that was the first 12 months we were buying in both those areas. 95% of our clients were interstate. Our Perth clients didn't want to buy there because they knew there was the bias there, right? Whereas now, now with the AUKUS program as well driving a lot of sentiments, that's another big thing about sentiment, right? You're seeing a lot of that southwest region has done really good growth in the last 12 months. And most of it, look, there's definitely suppliers, a lot of new build around there. So there's definitely a bit of a supply issue, but that's only where people can get into. I reckon every second client that comes to us wanting to invest in Perth, they're talking about this AUKUS program. So AUKUS is really driving a lot of sentiment in those areas. And, we probably had plans to start advising our clients to sell off some of their assets in Perth and Mandurah, but we've put that on the back burner because
Yeah,
the market's just had a second kick last year as well.
good to know.
Excellent. And then I think this is the last one. So this is the last one. So this is just kind of probably what I was touching on before in terms of that affordability index. And as you can see, Perth is the purple one. So we're still the most affordable capital city in Australia. And then you're looking at it as somewhere like a market like Sydney, which is now only starting to just finally soften. So Sydney actually had a pretty soft year in 2025. And definitely the back end of the quarter. And we're now just starting to see, okay, that affordability, it's at an all-time high. So, when I was mentioning on those previous slides, I was showing Perth, historically paid up to 49%. Sydney's at its cap. Adelaide's at its cap. Brisbane's at its cap. So some of those markets are now, they're past their previous ceiling. So it'll be interesting to see when they start to slow down. Melbourne and Brisbane had a phenomenal sort of back end of the year as well and had a really, really kicker, but Sydney's starting to slow down. So it's a good indicator to understand, if the supply isn't matching the demand, the only other couple of things that are going to, there could be a variety of things, but the main two things, like I was mentioning, could be the sentiment or could be an affordability play. So, especially with Sydney, noticing that they're starting to stabilise when they're starting to cap out on that affordability at the moment.
Amazing. Fabulous. That's wonderful. Now, are there any questions before we finish today's session? I will just check if there's any in the chat. Nothing has come through, but if anyone's got any questions, either let me know here or know that we have these scheduled in for the next 6 months. So do jump on and feel free to invite anyone that you think might benefit from it. And I hope, that's for me, definitely, it's just great to have that knowledge in the back end, just so when I do get those questions, I just have a little bit more insight. And just feel a bit more confident with how I am advising clients. So I appreciate your time, Reese. Now we are going to jump off, you and I, and we're going to jump into the Melbourne one. So thank you everyone for joining us today. And I look forward to seeing you next month.